the purpose of this Future of Europe lecture series is, as the title suggests, to say something about the future of Europe, and what could be more fitting now than to say something about the future of Europe in light of the corona pandemic. As opposed to many other talks, we will not focus on virology and the spread of the virus and all that, but economic questions. And I'm really happy to have Waltraude Schelkle from the LSE with us. Waltraude is a professor at the European Institute of the LSE, and she's probably one of the people who are best able to speak about the political economy of the corona crisis and the post-corona crisis, because in my sense, Waltraude is a true political economist. She knows a lot about economics, and she also knows a lot about politics, which is the essence of political economy. She has worked extensively on European integration and on monetary solidarity and finance in the European Union. Her most recent book on the political economy of monetary solidarity, published by OEP, I think is a must-read for everybody in this interested in this topic. That was the little commercial break. I'm really glad that Waltraude joined us here. The idea is that we have something like half an hour of a presentation maximum by Waltraude, so to introduce to the topics. And you can ask questions in the chat. We will give a short introduction of how to doing this, and the event should be over in an hour in order not to overdo the attention span of all of us in these many online meetings. So you can see that we are live, and Waltraude has the floor.
Okay, thank you very much, everybody, for attending to a lecture that does exactly what we always tell our students not to do, namely talk about the future, because it can't be researched, but I'm happy to violate any of the things that I tell my students. It gives me a good opportunity to update a little bit what I have been thinking about, looking back at basically 12, 14, 15 years almost of building the euro area, and then with its existential crisis. Monetary solidarity was the topic of my book, and that was itself a known provocation, because when we talk about solidarity, we think of something that we know perhaps from the welfare state, and the EU itself takes it in that way that I show you here. We like to think about European solidarity as humans, European citizens, EU citizens, empathizing and protecting each other by helping each other to treat patients. When you have free beds, you take somebody from the other member state, give each other health workers. If we have additional medical equipment, we give it to those who need it most. If we have some free equipment, and of course also to citizens generally, to our health workers and citizens. And bringing people home, all these people that were stranded in the rest of the world, and thinking home is the EU and its member states. Now, you all know that it was not easy to get to that even. When Italy asked for activating an existing risk-sharing mechanism, namely that civil protection mechanism, which is here in this little snapshot of European solidarity that Romanian care workers helped Italy, silence was the stern reply. In fact, at the time, there was even an export ban of medical equipment from Germany in place. That was apparently because Germany had sold a lot of equipment to China and suddenly realized it may run out itself. All that was revised, but the political damage was done. And this contrast of that the EU actually does risk sharing, and does it on a scale, I will argue, that is massive. The impression is always another one, namely it comes late, it is not given freely and generously and with empathy. Why is that? And what are the consequences of that? The question that you could ask was the question of my book, and is the question that I have now and in this lecture, is it conceivable that we get to something like this humanitarian solidarity, the welfare state, the social solidarity in interstate solidarity? Because after all, it's typically executives that negotiate and deal with each other bureaucracies, parties, and of course our governments? My short answer is very unlikely, no. While I do understand the euro area as an insurance pool, and you can trace it back to the crisis of the ERM when there was this referendum about France and so on, that it was really financial instability that gave the last kick to do this unprecedented thing of sharing a currency between fiscally sovereign nation states. You can also understand it as an insurance pool between countries that have either low but stable growth. That's the richer part of the euro area. And those who have unstable growth but high growth potential. That's the middle income countries within the EU context. Now, when you have such a diverse insurance pool, I say in interstate relationships, there is a paradox. The more diverse you are, the more economically beneficial this is, but also the more difficult politically it is to realize this potential of risk pooling. Robert Cohen had this term of political market failures, and I go through this and apply them continuously throughout the book, and I don't want to go into that now. The consequence of these political difficulties of making a huge and actually really economically beneficial potential for risk pooling and sharing active is that it will only emerge as a byproduct of national incentives to do something, and not because you think of the greater good of the insurance pool. It is rarely ever a direct solution to collective action problems. Severe crises can perhaps lead to this, but I would not normally expect it as something that happens, and I give you an example for that. An example that I think and has already played a bit of a role in dealing with the pandemic is this permanent fiscal capacity about which all the conflicts at the moment seem to congregate on. What became this European Stability Mechanism, the ESM, started out as a temporary facility for only 3 years. The EFSF, we can forget about this acronym now because it doesn't exist anymore. And as itself was already a way of regularizing the Greek bailout and making it more orderly, which was just a network of bilateral guarantees for these bond issues to finance the first Greek bailout. Now, that was a huge innovation, and don't underestimate it, because it basically said, yeah, we cannot live with this no bailout clause. And there may be instances in which sovereigns, for no fault of their own or little fault of their own, will get into difficulties where they should be where we should be able to help them, not least out of self-interest, about which I talk later. When it was created, then suddenly because after the second bailout for Greece and debt write-down, there was suddenly nervousness in the markets. What about the other swine difficulties? Ireland was already in one, Portugal was in a program. Will there be more to follow? And so the crisis escalated in mid-2012, and the discussion was, should we bring the permanence of this bailout fund, the ESM, forward? And I just briefly want to show you the political context in which that then happened. So we have in 2011-12, because of the second bailout with the debt relief, a crisis that requires much pressure on Merkel to bring the ESM forward. The face-saving device, we make then everybody to sign up to the fiscal compact. That's a much tougher framework outside of the treaty, tightening the rules. The European Stability Mechanism would then allow permanent bailout fund that bends the rules, buy bonds directly from issuing governments, right? Something that the ECB famously cannot do, and access for all who sign this fiscal compact. So even non-Euro area countries have that. That allowed Then Draghi, this is still not, one thought if we bring the ESM forward, that will help to calm down markets. But it required really this speech by Mario Draghi, which is to some extent really still a puzzle. Whatever it takes, and it will be enough. Speech, for which in return he really requested that the banking union will go forward. So outright monetary transactions with an ESM program that then triggers, and within 2 years we got a banking union with the ECB as the single supervisor that split the single market, an enormous decision if you think about it. Has a resolution fund, small, but at least it's a beginning. And in principle, it was agreed to have a deposit insurance scheme on which the Germans reneged later on. So this was the context for this. And the extent of this assistance that was given is really quite enormous. Here is a Bruegel study that just shows how much the IMF went out of its way to help Europe. And Europe, a club of rich countries, shared the risk with the rest of the world. You see the red columns show you how big an IMF program typically is a share of the GDP of the beneficiary, and the euro area was a manifold, 18% on average, while a normal IMF program is 3.5% of GDP, and differentiated for Latin America. The blue ones are the length of this program, which now should be raised as well, because the third Greek program is 40 years before any repayment takes part. If you add to this, which is only the IMF part of it, which was a junior member of these Troika programs, then we get to values for the non-Euro area countries of 19, 20, and 4% in the case of Romania. Greece, the biggest sovereign bailout in history, 115%. These are the three programs I calculated. Ireland in the range of 43, 44, 57%. Only Spain, that had only a bank restructuring program, it's the size that you would expect from a normal, ordinary IMF program. So you see, these were massive bailouts, unheard of in the history of sovereign debt resolution, debt restructuring. And it is a good example, not my best one. My best one is always the target, the imbalances in the target cross-border payments mechanism. But it is one that for the future of Europe is probably a more speaking example than target. As I said, the capacity created is huge, and it is a huge reinsurance mechanism for national fiscal capacities that in a systemic financial crisis, as I treat all of them, from 2008 to 10, 11, 12, 13, with Cyprus as the last one, a reinsurance mechanism for these national capacities that are quickly overwhelmed when we have a systemic financial crisis. The official EU term that has become quite common, the ESM talks on its website like that, is that it is a firewall. Now, if you think of what is a firewall is meant to protect those, a fire from spreading from those who have the fire to those who don't have the fire, right? And that tells you what the interest was and why we could create such a massive capacity that compared to what the IMF has ever lent, so the maximum that the IMF has ever lent, which happened to be in 2012 because of its huge help for Europe, was about 120 billion, I calculated. It has the capacity of lending 4 times as much. Yet this is not through a budgetary mechanism. And just to say to Germans, don't become hysterical, you have not paid for this, the German taxpayer. It's much more clever than that. It is like the IMF, a fund that can borrow in markets based on the guarantee from member countries. They don't give credit, they only guarantee this bond issue of the ESM. And Italy in all this, it's never called a creditor country. It's always part of the debtor countries. It has guaranteed every single program, just like Germany, just France did. Every country that didn't need a program had to guarantee its share in this bond issue, and the share is determined by the paid-in capital in the ECB. So over 20% of each program is guaranteed by Italy, whilst 27% or something is guaranteed by Germany, because it's a bigger country. Now, any of these huge loans come with intrusive conditionality, and this is, of course, what we all associate with the ESM. Not solidarity, but intrusive, harsh conditions that almost sink every government that has to implement them. Now, what does this example tell us about the long recovery from the corona pandemic? Monetary solidarity is tough love. It's not empathy and holding hands and saying, yes, we are solidaristic with each other. It's, if we do this for you, it will not come cheap because there's otherwise forever the moral hazard risk. A good part of this intervention will be monetary financial policy, because as I told you before, the whole ESM, bringing the ESM forward was orchestrated also with an ECB intervention, and the ECB going out of its way and saying we will do whatever it takes, requesting in return that the banking union will build. It was not the first time that the ECB uses its leverage in these situations to ask for further institution building. So it will be part of monetary financial policy, because the difficulties of economic recovery will typically show up in financial instability, a credit crunch for the really non-financial economy as well. But the markets are faster and usually more volatile in showing and forcing the hands of authorities. That itself will then trigger some creativity in building more EU fiscal capacity. And perhaps our supply chains, our interdependence will actually show even the fortunate ones in the whole affair that they have to give in and help the less fortunate member states. I tell you one thing, it will not be a pretty sight. It will be marked by Monet's curse. It is not a blessing in disguise, in my view. It's a curse. Europe will be forged in crisis and will be some of the solutions in this crisis. To make it short, why I think it's a curse, it's the carefully suppressed power asymmetry in the EU comes to the fore in those situations. And that's nobody's fault, because decisions have to be made. Collective action failure blocks decisions. And therefore, there will always be, in the last crisis, the Franco-German couple that goes forward and sets the agenda for most others. I just need to go further down, sorry. So first, the monetary financial policy. What you have here is from a blog or an opinion piece by Martin Wolf. GDP growth, the link between monetary and fiscal is, of course, the relationship between growth that can be stimulated through fiscal policy and the interest rate that is, at the moment at least, for bond yields controlled by the ECB. The short of this is, when you don't add through your primary fiscal balance to the debt stock, then your debt stock still has a momentum of growing simply because there's an interest rate to pay on this. While the growth rate of GDP is important for saying, how much is the potential of my tax base growing? And if the interest rate is smaller than the growth rate, obviously your debt stock has a lower dynamic than your tax base. And that's why this is an important back of the envelope kind of thing to look at. How is the growth rate relative to the interest rate? Now, an ECB has shown how decisively it can act. I mean, we are in an extended period of, I would say, constructive financial repression, keeping government bond yields as low as you can, and all this through these massive liquidity interventions. It can now, as a supervisor, as an SSM, attach actually strings to its liquidity support for banks. Let me say, and you're not paying out dividends as long as you're on my, liquidity trip that keeps you alive, which is not something they could do in 2009 onwards. They can now exercise macroprudential policies in the downturn. You know, the capital buffers disappear in a crisis. Capital buffers as a way of making banks safer is an extremely pro-cyclical thing. Capital buffers are never a problem in the boom, and they always disappear in times when you actually need them. So now the macroprudential allows you to adjust the required capital buffers downwards, and that should also help banks. And finally, it can ease the credit crunch by making much more targeted programs. It was extremely inventive. The latest PPP or TLTRO, the third program, I think, can actually give banks extremely good interest rates, even negative interest rates. In other words, pay them for lending on this liquidity to non-financial firms. Fiscal capacity. You wouldn't be here if you hadn't heard about this whole debate around Corona bonds and so on. The construction site is, should it be the EU as a whole or the euro area only? And I think at the moment the pandemic has the good side that it can act as a face-saving pretext, because it has a wider integration rationale. And you could also say, you know, there's nothing particular euro about it. It has affected us all. Should we go with existing institutions, or is something new a chance to really change it? Frankly, Corona bonds, I think, are important. They are symbolic innovation to show we do something together, and financial markets cannot divide us. We European citizens, we European governments, EU governments, by picking up particular countries for more or less good reasons, and then divide us into debtor and creditor countries, which is a misnomer, as I indicated earlier. And it's always easier to repurpose the capacity that exists. Unfortunately, the ESM, with its harsh conditionality, was so toxic in Italy that first Conte ruled it out, but he had to step down on it. And minimal conditionality, namely that you use it for public health purposes, is the way to go. Debt or grants, you know, should we put all our political capital in creating a mutualized debt instrument when actually the debt-bearing capacity of some countries is really at its limit? So should grants be something? Well, one of the beauties of an ESM loan is that you can make it a quasi-grant by making the grant element, as one has done with the third bailout package for Greece, so generous that it becomes almost a grant element. And who of us will know I probably will not even live anymore by the time they have to repay this. So you can make it a grant then, because nobody cares, frankly. The Spanish proposal for this 1.5 trillion Corona fund based on perpetual debt that then gives out grants to countries that need it most is actually a very ingenious merging of both of these things. It doesn't respond. Now, to conclude, I don't have to tell you the idea of a V-shaped recovery is probably too optimistic. It will be marked by a long, difficult recovery from the pandemic, not least because most of these service sectors are so heavily affected. And most people now think that we will all be a bit more careful with our holidays and going to the pub and so on. But who knows? And unfortunately, it's a pandemic. It is not Europe. It is the US. It is Brazil and China and India, and also the poorest countries, Ethiopia. The emerging market countries have experienced a capital flight. I listened to all these Corona webinars that we have at LSE, and it has an international outlook. The tsunami that's coming there in terms of debt breakdown in the emerging world, we will consider ourselves to be lucky in Europe. I expect still Euro area membership to be helpful in this recovery, even though, as I said, monetary solidarity never looks like this empathy. We're talking about firewalls instead of saying we have created a massive bailout capacity that we can use the way we want for sovereigns that need it. I would like to remind everybody who criticizes the EU and the Euro areas deeply for it, which is practically everywhere, to think about, look at conflicts within member states. the sovereignty solidarity conflict between the devolved governments in the UK, almost still a member state, Germany, even Italy, north and south, is something to watch. And I do feel member states should perhaps obey this new categorical imperative. Don't propose something for the EU to do if you can't do that at home. That would help everybody and would also put things in perspective. Thanks a lot.
Thank you very much for this very interesting presentation. I have to first make a technical announcement, and that is I'm not 100% sure whether this question mode works now. So those of you who have a question, please just post it in the public chat to the right of your screen, and we will then select questions. It seems that the Q&A mode is now back to work, so please post your questions in the Q&A mode and we will then select them. But before we come to this, and you have some time to think about it, I will ask Waltraude one or two smaller questions. The first one, Waltraude, is to some degree you stressed very much the continuity between the past instances of monetary solidarity and the potential future instances. So it will be tough love, it's hard, it's difficult, high conflict intensity, etc. That may certainly be true, but I'm wondering whether there is not some important difference here, and that is that the past instances of monetary solidarity, we had a huge degree of moral hazard. You know, it may have been overblown, but you can at least make the argument that some of the countries who were in financial and fiscal difficulties had some guilt of their own, you know, however strong that is. And that was used, especially in this country, as a strong moralizing argument, to say, no, our money stays with us and we do not give it away. But the corona pandemic, I think, is something totally different. This is really the natural disaster type of event. You know, I mean, we have heard these reports here in Germany that some people said, yeah, you should have had a better health system, and then to hear only, well, the health system has been scaled down because you were a program country. So that doesn't really work. So my question is, isn't this a fundamental difference, that moral hazard in the first instance and no moral hazard or very little moral hazard in the second? That is the first question. And the second question is, history somehow repeats itself, as we all know, and the first time as a tragedy and the second time as a farce. And when I watch these events, I have the impression, well, it's always the same thing, you know. We see a severe crisis which is characterized by the requirement to take enormously far-reaching redistributive decisions under high time pressure. You know, this is exactly what you do not want to do. And we all hope it will be over, and we all know it will not be over. Do you see, this is my optimistic mode here, do you see any chance that in Corona, as it is not so much characterized by moral hazard, we will get to something a little bit more durable than we got last time? Thanks a lot. You have the floor.
You're absolutely right, Markus, that, of course, last time you could say Greece did act recklessly. It was running into a fiscal crisis one way or the other. I mean, if you had 4% growth rate, way above the EU average from 2000 onwards, and you never managed to come to anything close to a fiscal balance, that doesn't bode well. On the other hand, Greece is almost the exception from the rule. Italy, to take the country that we're all concerned about now, did practically nothing to stimulate its economy out of fear that the markets would not take it well if they get out of their way and do counter-cyclical stimulus. And it had throughout a primary surplus, meaning if you deduct the interest rates over which no present administration has any control, they had a fiscal surplus, something that Germany had not achieved at any of these times. To accuse any of the other of moral hazard, well, any country has vulnerabilities, and if the markets suddenly notice them, although they were there all the time, then you're doomed. And Germany would be doomed as much as France or any other country. So I think the moral hazard was overblown then. The commitment problem of the lucky ones to honor their mutual obligation to support each other when you have no longer instruments of protectionism, state aid highly regulated, the interest rate is gone. I don't consider the exchange rate to be a particularly helpful instrument here, but even so, then you have a kind of implicit obligation to help each other. And that commitment was very reluctantly honored. And so I think the commitment problem of the fortunate, the lucky ones, was a much more severe problem than the moral hazard of supposedly those unfortunate ones who did not want to bring a decline of 15 and 20% of GDP on them. But you're actually even more right now that, of course, not even anybody in his or her right mind can say how Italy brought it upon each other. Although I heard stories like they didn't care enough in those good times that you just recently experienced. Perhaps my memory already fails me in advanced age, but I didn't see the good times in which Italy could have build up these huge buffers for a pandemic. And that raises, of course, more your puzzle with the farce. Should we not have, at this point, really embraced it to mend fences and say these cleavages that have opened up in the last crisis between the creditor and the debtor countries, the guarantor and the debtor countries, be friendly, just as we have done with Ireland and the Brexit? And should therefore the repetition not be much a smoother affair? Well, I really hoped so. And I said that to people, and it didn't happen. In fact, it was excruciating and heartbreaking to watch how the EU at first instance did not respond to Italy's request. But I guess everybody was in emergency politics mode, caring first, and it was all under national control. One of the things that are different this time is that the technocratic expertise side comes all from the domestic level. And that has really led to less cooperation, quite apart from Trump, quite apart from China and all this. We can blame forever other people. There should have been a more coherent response, but the EU had not much competence and therefore could not fall back on tried and tested networks. A farce, I'm afraid it will not be, because all the political situation has really changed, and the political climate is so much more, should I call it chauvinistic or parochial, that I am not optimistic that we will, wake up and see we can only go through this together. At the moment, there's a rallying around the flag effect that helps governments, but that will not last very long, because it will be a long, hard slog to get out of this. And mistakes have been made. Nobody's fault, but governments will be criticized for it.
Okay. Thank you very much. As I said already, the question mode works already, so we can actually have questions from the audience. And so those of you who have posted their questions in the general chat, please repost them to the Q&A mode. And here's the first question. How would you evaluate, this had to come, how would you evaluate the recent ruling of the German Constitutional Court with regard to the pandemic, monetary and fiscal solidarity? So is the Bundesverfassungsgericht simply bluffing, or do you actually foresee a showdown over sovereignty in EU constitution law coming for Germany of all places? I know that you're not a lawyer, but what can you as a political economist say on this? Thank you very much.
I have actually thought a lot about this over this weekend, and I had expected this question coming. I'm the one who smiles here while I read a lot of blogs and, Katharina Pistor, Willem Bouter, a lot in the newspapers. Everybody is alarmed. This is terrible. This will be the future crisis of the Eurozone. A court gone rogue is the headline. Now, I'm a bit amused by this, because has anybody noticed the deep irony that there is a court, in order to have his deeply legalistic argument with the Court of Justice in Europe, the deep irony that actually this German Constitutional Court challenges deeply the independence of the ECB. It says you cannot choose your policy instruments like QE if that goes to a certain volume that we find too much. You have to do a proportionality test. In other words, we are asking whether you can just focus on inflation only, or price stability. In this case, it's bringing inflation up, but still. Now that's in the treaty. And thirdly, it says if you don't do this proportionality test, knowing bloody well that they cannot order the ECB to do anything like this, then the Bundesbank may not be able to take part in this anymore. In other words, questioning the unity and the hierarchy of the European system of central banks. And why is this all so hardwired that any national court will run against a wall with this? Because German governments have insisted on this, that it is constitutional. Now, I call this irony, that you achieve the opposite. It's an irony, you know, if you achieve the opposite of what you have intended. What will happen, I'm pretty sure about this, and this is my political economist, while I think at the moment economists and lawyers dominate the debate. What will happen is that Jens Weidmann, who welcomed this ruling, will be forced to actually toe the line completely of every next ECB decision, because he doesn't want to be out of doing policies by the ECB, or actually be guilty of creating mayhem in financial markets. So he will have to thank the court for his predicament in the future, and it will be wonderful to watch for those of us who think the Bundesverfassungsgericht has really overstepped its mandate here and has asked the court to do something that, according to the ECB statute, which says it's the primary objective, and you can support other goals, economic goals of the European Union, if that is ensured. There is no proportionality test to be done. This is lexicographic, just as A comes before B, so price stability must come before all other goals of economic policy. Then actually, the European Court of Justice was more black letter than our Bundesverfassungsgericht in Karlsruhe. And they will run into, well, the next Gauweiler meeting, Lucke meeting, but they can have court cases as much as they like, and until they're red in their face, it will not go anywhere. So that's the good news.
Okay, thank you very much. So we have a follow-up question on, this is again on Germany. Is there a case for expanding the budget in response to the crisis? The budget increase might work around the limits of borrowing and conditionality and around the ruling of the Federal Constitutional Court. I think this is a proposal that Miguel Maduro has already made. And I mean, I'm not asking you to comment on the legal merits of this, but is there a political economy case for expanding the budget?
There would be totally, and this is part of this, I must say, I think really ingenious proposal of the Corona Fund by the Spaniards. Thanks for asking, Frank. That you say you have a debt instrument that doesn't necessarily even mutualize the debt. You have the budget of the European Union as the security, just like for a housing credit, the mortgage is the house itself. The budget of the EU is what mutualizes it in a way. And that will then be this debt that will be perpetual. In other words, it will not be paid back, only the interest on this debt. And that's an instrument markets are keen and hungry and in dire need for safe financial instruments. This will be one. Then you hand it out as grant to countries that really cannot pile up more debt. So yes, and that should be part of the budget, perhaps separate from it, because it's for a particular purpose and can be earmarked for that, for such things that affect us all. And I think that would be a good way into trying something that we need in the long run in the euro area, but there's no particular reason at the moment to push this to a limit where it comes to a standoff where it just creates more political acrimony, and that's unnecessary.
Okay. The next question is, could and should the ECB extend programs like PPP to non-Eurozone countries that are committed to joining the Eurozone and some are coming close as they're entering the ERM too soon. They also may need solidarity in this crisis. So basically, what about extending solidarity beyond the Eurozone?
I would always be in favor of this, but I have very much the impression that at the moment the Central European member states, in an interesting way, not in a self-interested way, they're a bit of a challenge to me actually. Out of a principled aversion to giving up sovereignty rights, perhaps given their historical legacy, they say we still want to be fiscally independent or responsible nations and don't want to create all these capacities at the EU level. They seem not to want to join anything like that, and now, if anything, veto players in the whole negotiations around this. The new Hanseatic League has kind of congregated them. It is quite interesting that the Central and Eastern European countries, and I'm saying not out of self-interest, because they would benefit, I'm sure, at some point from such solidaristic mechanisms. They're small open economies with volatile markets, but they say we rather take it. Now, I do feel it is a problem that if you do not share the obligations, and it would be only the euro area that says we create this, to then let everybody in. No, then you have to commit and be part of it. At the moment, they sit on the fence, whether it's with financial regulation or other things, and come only out of the woodwork from time to time, not always constructively. And I think there must also be a bit of reciprocity and an incentive to go in. That said, the EU itself has tried not to let this cleavage of the insiders and the outsiders of the euro area to become too deep, and therefore said, if you sign the fiscal compact, which any of these principled Central and Eastern European countries happily do, then you can also get support under the ESM, the European Stability Mechanism. And so in that sense, that could be a model. And I have the impression politically that is what would be done in any case. I'm slightly more hardline and think at some point there needs also to be a commitment from all sides. And that requires also from the new member states a bit more commitment.
Okay, thank you very much. And we're waiting for the next question. And that is, again, on public opinion. How important is public opinion for exercising interstate monetary solidarity? Do you see a window of opportunity in Northern Europe for public opinion for more overt instruments of risk sharing? Or if I may take another question that I see in the Q&A mode, do you rather think that the end of the rally around the flag effect could lead to a larger support for national populist parties, and as a result, as a further radicalization of the political sphere in Europe? So basically, a lot seems to have to do with public opinion. You know, one version says, well, there is now the window of opportunity for solidarity because it's a pandemic. The other one says, well, we have rally around the flag. No, this will harden further the nationalist sentiments.
So first of all, to point to public opinion is extremely valid and important. That's a good question. Public opinion and institution building is a little bit like anti-cyclical or counter-cyclical fiscal policy. By the time it has gone through the normal procedures, it's often too late for doing it. And this is a bit our problem with any of the more advanced proposals. As much as I'm in favor of a Corona bond as a symbolic act, and at the moment, Christian, I think there is a window of opportunity. By the time it reaches this stage of fruition, we are in the recovery. And the second question then points to the difficulty. It comes, so to speak, to the decision point when public opinion may have flipped. So the art of it is, and I really do think the pandemic is an opportunity more than the euro area crisis for this perception that Markus mentioned at the very beginning, to say, well, this is a humanitarian catastrophe. And among us, and it could affect us all. We all had some experience with it. But as we go out and governments don't make the case and still struggle with their own difficulties, it will not be easy to do. And it has throughout. Why monetary solidarity is never, a pretty sight, has to do with that governments are split and have to play to two galleries. The one in the European Union, where they have to show that they are constructive member states and help each other out of pure self-interest, if you will. And at home, they have to say, whatever we give, fortunate ones, whatever we give in the to our member states, it will come with tough conditions. And tough they were. It's particularly difficult in Germany, where there's not just public opinion, but as you know, these out-of-work economics professors who have nothing better to do than to run to Karlsruhe at every possible instance. And that's something that Angela Merkel, with the best will in the world, cannot ignore. And the court has unfortunately played a little bit to those things. I think it had navigated in earlier times this quite well. And I'm not saying that the ECB cannot question in anything it does. In fact, that should be what public opinion requests. But it is not for a court to ask for a proportionality test that the ECJ has said is not appropriate here. Only if it manifestly violates something, it should do, and that was exactly in line with the treaty. So times will be tough, and you will have to move quickly, and you will have to write into it very clearly this public health rationale. Now, that can be later on moved on and say public health is more than just, buying face masks for health workers. It's also the fiscal effect that it has, mental health problems, long-term youth unemployment that we are going to face.
Okay, thank you. I didn't hear your last word, so I think your answer is over now. So we
trying to do multitask.
Yeah, this is the effect of live events. So we can move to the next question. And from populism and public opinion, one cannot avoid the UK and Brexit. So how will Corona influence the Brexit process? And will Britain be financially able to recover from the economic downturn due to COVID-19 without financial support by the EU access to the ESM?
To start with your second question first, Linda, I think it can, as long as the markets accept it, and they have always accepted what the Brits did, because the country it is a financial center that has never foregone any debt it had under the most difficult circumstances. It honored its sovereign debt. And it has a Bank of England that has said, we buy up any bond issue that is there. So as long as the central bank says, I buy this up, I stabilize the price of bonds, it's the safe asset, right? A Brazilian or Russian central bank couldn't do this, but the Bank of England so far can do, and I trust that they will manage that. So they will be able to do it without EU funding. After all, the EU funding is also never so generous that you couldn't do without it for a big country. On your first question, I mean, I'm just flabbergasted that at least when you listen to the debate here, there is no sign of that they would retreat, that they would say, well, let's perhaps postpone the Brexit thing. At the moment, that seems to be something where the supporters of Boris Johnson, who are, after all, firmly in the Brexit camp, have basically had to sign his life away to not question this. And so I feel it will come to a very hard deadline in June, and we may crash out. What this then does to the economy is much worse than this non-access to EU funding. But at the moment, I mean, I hope, but this is my hope against facts and actually public statements, and even private statements, says the FT. It seems as if they go down that route, and that makes me really scared.
Okay, thank you very much, and we move to the next question. Tax evasion. So after the financial crisis, there was much talk about cooperating to fight tax evasion and dismantle tax haven. I guess the idea is, well, we should get more public funds. Do you think that this has a new chance after Corona, or as a response to Corona?
Yes, I do. I mean, I think they will be so cash-strapped that, yes, anything they can lay their hands on. I think even, and there are already a few signs that fiscal authorities become creative again. I mean, I do fully expect that we get some form of wealth tax one way or the other to help us with long-term care costs, to which this crisis has also has put in focus that we need care for vulnerable, elderly, and so on and so forth, children, all that. And we will have to pay them perhaps a bit better. I mean, I think there is now an appetite among the public, and if, to take the UK again on the basis of the last question, the UK has already noticed that they will not be able to staff their National Health Service without immigrants, right? So if they're not wanting to take 80% immigrants working in the national healthcare, while the official language is, we control this now tightly and first comes British workers, they will have to do something about this. So I'm not worried about this. This is an OECD agenda, and the OECD is actually quite credible and tough on this. The financial transaction tax, if that was part of your question, I don't see much future in this. It's a tax that is difficult to implement, and it has gone nowhere, and the richness in terms of tax revenue is not worth the effort, I think, what most member states think. And to some extent, I understand it in a pure, where should you put your effort if it has transaction costs? Then do close tax havens and think about how you can bring in a wealth tax and a tax on pensioners, because without that, I don't quite see how we get anywhere close to a sustainable fiscal path.
Okay, I think we will now move to the last question. And this is against the backdrop of a piece that Peter Graf Kielmannsegg has some weeks ago published in the Frankfurter Allgemeine Zeitung. I'm not sure whether you're aware of this, but if not, I can say something about this. I mean, should the pandemic serve as a trigger for a paradigm shift towards rather project-oriented, federally acting Europe? I think this is the Bruno Frey type of overlapping concentric jurisdictions, then continuing the unspecific irreversible integration proposal. So basically, I think what he's argued is, can we come to, or what Gary Marx and Lisbeth Huge have called type 2 multi-level governance, the functionally oriented type of Europe rather than the ever closer union? That is, I think, the question, if I understand it correctly.
Good. Thank you for that. I was not aware of it, although I had just seen it somewhere in headlines that Kielmannsegg had made this some proposal. I mean, I don't think that the pandemic will be that. It is the post-Euro area crisis thing, and that still has to bed in. We have extremely complex rules and economic policy framework that will push towards this, and no sign from the EU outsiders Euro area outsiders, that don't want to come in. We will for a long time remain in this. There is not one Euro area that is overlapping with the EU. And at the same time, nobody wants to lose all the new members, quite a few of the new member states, or for that matter, Sweden, Denmark, and so on. So if that's the state of affairs, something has to give. I never thought it was a good idea to go this ever closer union. Close enough. And yes, it should be close, but it's part of good risk sharing and everything else, also political division of representation, accountability, and all that, to not go to a completely unified union. There is something to be said about laboratory federalism, to try out different things, which is why I also don't find that in the pandemic, everything has to be coordinated by the EU. It has to be made sure that we exchange our lessons, but it doesn't have to be all tightly coordinated. And so in my book, I say unity in diversity is the motto that should be much more practically exercised. Whether that's project-based, I have not thought enough about these technicalities. My thinking in the area which I study was more about reinsurance that has different layers of insurance, of which national layers are one, market insurance is another, and then a supranational reinsurance scheme. That is another way of thinking about this. But I agree with the thrust of this to say we need to think a little bit differently from this ever closer, and somehow at the end is a kind of federation or tight union and a state-like institutional building is the telos. That I don't believe, and I don't even think it is a telos that I would totally be happy about.
Okay, thank you very much, Waltraude. We took the last really future of Europe question for you, and you gave us a somehow British reply to this. Thank you very much for this. Thank you for giving that talk. Thanks to the audience for listening to us. This will be continued in the future with another Future of Europe lecture series. We look forward to hearing you, and I will now close the event. Thank you very much and have a nice day. Bye-bye.